Welcome back. You're tuned into ET now, and Piramal Pharma has reported weak set of numbers. Although revenue has declined by only 1% on a year-on-year basis, EBITDA has seen a decline of nearly 26% on a year-on-year basis. So what led to this, and what is the outlook going forward for the company? To discuss exactly this, we are now joined by Nandini Piramal, Chairperson of Piramal Pharma. Nandini, thanks so much for taking your time out and joining us here on ET now. And this time we have seen a decline in EBITDA of as much as 26% on a year-on-year basis. If you can decode that for us, what led to this? And after the decline, will you still stick by your guidance for FY26 that you had shared earlier?
I think first I want to iterate that we still are standing by our FY26 guidance, which is mid-single digit license revenue with mid-teens EBITDA and an improvement in net profit. For us, generally, quarter one is a soft quarter, and so some of it is due to timing issues. So we talked earlier a little bit about we had a one-time destocking event for the CDMO business with one of our big customers. And if you exclude that from the numbers, the CDMO business still grew mid-teens. So overall, I think we're pretty confident in our numbers and our guidance for the year, and we stand by that.
Okay, so you continue to maintain your guidance for the full year FY26, but what is your growth outlook, especially for the US market, in the context of increasing tariffs and the US government's push towards insourcing development and manufacturing? What impact will that have on US market for you?
So I think one of the things we're very well set up, our network is set up to respond to those that want to onshore and reshore the business. So, for example, we have 5 sites in North America, in US, Canada, as well as in the UK and India. So I think that's a very good thing that we've done. We've built a network, and we actually are available and ready to support those of our customers that want to reshore.
Understood. So that's as far as US market is concerned. But Nandini, in the past, you had also indicated that FY26 could be a relatively muted year, especially with respect to contribution from patented products due to lower contribution from these products. What is your guidance now, especially when it comes to these patented products?
Yes, we are. We mentioned when we talked about last year was that one of our big clients said that they would actually destock our products, the products that we make for them this year. So it's a one-time event because they had bought a lot of product for launch. And then once that launch quantity is used, they will return to a more normal quantity in terms of sales. So therefore, we talked about saying that this year is going to be a muted year, and we expect single-digit revenue increases over the year.
And Nandini also wanted your thoughts on CHG business, and you said that you're expecting CHG business to experience strong growth. In fact, you're expecting double-digit growth for the full year FY26. If you can tell us which factors and which triggers will actually help you achieve this double-digit growth for this segment of the company?
One, we've got a very strong position in the inhalation anesthetics business, and we intend to grow that, especially in the rest of the world. Our new site came online in Telangana in April, and throughout the year, we expect to get more registrations on a market-by-market basis. So that will be the near-term growth, as well as new licensed products. So, for example, there's a product called Niatricon, which we just launched in Finland and expect to launch in the UK and the rest of Europe over the next coming quarters, which is a hospital product which is used for NICU babies. And so that's one of those that we expect will do reasonably well. So products like that, which are complex hospital generics, will also give us that growth.
Understood. So that's as far as CHG business is concerned. But Nandini, what will your Capex guidance be then for FY26? And any latest update that you can share with us on the recent expansions that have been done by the company?
We just broke ground on our Lexington Capex, which is sterile fill finish, which is going to be part of our integrated ADC platform. It also does do normal steps. It's in sterile fill finish, so can be used for other products as well. That will come online in 2027. But a lot of the Capex that we plan to for this year will be part of that. We planned about $100 to $125 million of Capex. It will be a mix of Capex across the world, whether it's India or outside.
Okay, so that's as far as company's expansion plans are concerned. Nandini, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the